Good morning everyone, welcome to another RF Crypto video. Today's markets have gone further down by almost 4%. Last week, the global crypto market cap was standing at almost 2.2 trillion. It has since lost almost 10% of its market cap and now it's standing at around $2 trillion. Bitcoin saw its price tumbling down 4%, Ethereum by almost 4%, and if you look at the rest of the market, everything is on the red. Dogecoin has gone down by a significant margin. It's gone down by 9% and it's down to the levels they were before Elon Musk purchased 9% of Twitter and became its largest shareholder. And this is simply because there are a lot of liquidations in terms of Dogecoin. Because of the Fed's hawkish announcement, people became more risk averse, and because Dogecoin is a riskier asset due to the fact that it's a meme coin, people took money out of it quicker than in other assets that have actual utility. So if you compare with Polkadot, Avalanche, Cardano, and XRP that actually have utility, Dogecoin's price went down by more than double of these other ones. So the markets are generally red. It's not a good day for the crypto market, and this is mainly due to the fact that the Federal Reserve basically stated that they're going to trim their balance sheet and they're going to increase interest rates in May. And this is a sign that the monetary party is over, in the sense that free money in the market at extremely low borrowing costs, which translate to the interest rates, it's all over. It's going to be more expensive to borrow money. There will be less money available in the market to invest in crypto projects. And there will also be less money or less free money available to pump into the crypto markets. And this caused sort of like a bearish sentiment among the crypto traders, which caused money to flow out of crypto into safer assets such as blue chip stocks and possibly bonds. The price of Bitcoin is standing at 43,500 at the moment. At 8 o'clock this morning, the bears finally won the fight that was going on for about a week. The price went below the $45,000 support level and it kept going down with 4 successive massive red candles before the bulls finally controlled the situation. And we see 3 small green candles, which means that now the prices have stabilized at around the $43,000 level. So previously the support level was 45,000. This 45,000 level is now the new resistance level, and the new support level is 42,000. So we can clearly state that the price of Bitcoin is trading between 42,000 and 45,000. I thought that the prices wouldn't go below 45,000 because yesterday there were a couple of red candles that were quickly bought up by the bulls, and the prices stayed between 45 and 47,000. However, I think that the market took the Fed's hawkish sentiments in a more negative sense than it actually should have been, because the US market is doing fine. It will survive. Unemployment rates are low and the economic growth is positive. So I think there has been some overreaction in the market, and you can clearly see that it's an overreaction here because the RSI is down below 40, which means that it is underbought. Or another way to look at it is that it's oversold. So I think that maybe the prices are going to go up and test this $45,000 new resistance level, but we'll have to see. Dogecoins and Solana traders nurse big losses as crypto see $400 million in liquidations. So traders of crypto futures lost over $400 million on Wednesday as most cryptocurrencies dropped below support level following hawkish comments by the US Federal Reserve. As I said before, this announcement that interest rates are going to increase, coupled with the fact that the balance sheet of the Federal Reserve is going to be trimmed, caused a bearish sentiment in the markets, caused a massive sell-off of cryptocurrencies in the markets. And when that happened, looking at here, at this point here, a lot of people had futures bought at around this price. So when the price of Bitcoin fell below this $44,500 level, all of those people's futures and options got liquidated because now their losses exceeded their initial investment, which means that the exchanges, in order to protect themselves, closed these traders' positions and they all went to zero. And I have repeatedly said that higher leverage means a more amplified effect on the price, which means that once the price went down and once liquidations took place and these people's positions were closed, the price went further down because it is a bearish signal. So Solana and Doge saw a combined $40 million in liquidation losses, which is massive because there aren't a lot of futures and options contracts active in Solana and Doge, and 40 million in terms of liquidation is massive. Bitcoin futures racked up 92 million in losses and Ethereum by 64 million. This is all massive. I mean, people lost all this money. In total, they lost about $470 million due to the liquidations. And this sent a bearish signal to the market and caused the prices to go further down. As I said before, people were expecting the prices to go up, evidenced by the fact that 83% of all traders in the futures markets were long. And when the prices went down, it went against this mantra and it caused their positions to be closed because it moved in the opposite direction than they had expected. Solana NFTs can now be finally traded on OpenSea. So NFTs minted on Solana blockchain are now available to trade on OpenSea following last week's official teaser that the support was coming. We know that OpenSea traditionally is focused around Ethereum, and Ethereum currently dominates the NFT trading space by a large margin. But with the addition of Solana, OpenSea now accommodates collectibles from the second largest NFT ecosystem, which is Solana. And I think that at some point, Solana is going to catch up with Ethereum in terms of its NFT mining and in terms of its dominance in the NFT space. Because compared to Ethereum, Solana offers lower transaction fees, it can handle larger number of transactions at the same time, and it is more energy efficient than Ethereum. I mean, it's a no-brainer that people, with the addition of Solana to OpenSea, they're going to switch from Ethereum to Solana, slowly but surely. I mean, if you want to mint an NFT using the Ethereum network on OpenSea, you'd pay something like $100 to mint a single NFT. That's incredibly insane. If you compare that with Solana, you'd pay maybe $1, maybe less even. So an NFT is an NFT. So you just have to choose which blockchain network you want to use. And I think people are going to obviously switch to Solana because it's much more cost effective. However, we all know that Solana has faced its share of problems over the years, which caused it not to get such mainstream adoption. And this manifested today once again because Solana's NFTs were live on OpenSea ahead of the official announcement, but then were missing for several hours. And this absence coincided with Solana network issues, which resulted in a network congestion. So there have been a lot of incidents where Solana faced network congestions. They weren't prepared for such a spike in activity due to the listing of NFTs. Frankly, Solana should have been ready and they should have upped their capacity in terms of handling transactions, but it doesn't seem to be the case. And this is one of the barriers that is causing people to shy away from Solana, sort of. But if they can fix these issues of constant network congestions and constant network issues, then I think Solana can overthrow Ethereum as the king of smart contracts and NFTs. Coinbase starts crypto trading services in India. Brian Armstrong, who is the co-founder and CEO of Coinbase, has been in India over the last few weeks, I think finalizing this deal and setting up so that the commencement of their operations run smoothly. And they say that they want to make a long-term investment in India. Coinbase wants to hire about 1,000 people in India at its tech hub by the end of the year in Bangalore. There are some controversies surrounding this because there is a bunch of new crypto taxes in India, which makes it less conducive to do business in the crypto industry in India and also to trade in terms of crypto. This law includes a 30% tax on crypto profits, which is already active, and there's also a controversial 1% tax deducted at source, which will be effective from July 1st. And this is one of the highest crypto tax rates in the world. I don't understand why they did it. I don't know if it's to raise more revenue or to dissuade companies from setting up in India and people from transacting in crypto, but it won't work because crypto is here to stay. Also, trading with Coinbase in India is going to be something more centralized rather than decentralized, which isn't so attractive because the onboarding of Coinbase would require setting up a UPI payment method. This unified payments interface is an instant real-time payment system allowing peer-to-peer and person-to-merchant transactions, and this is regulated by the Indian Central Bank. If it's regulated by the Indian Central Bank, they surely have access to who does transactions, where they send their crypto to, and who they receive it from. So it is a centralized system. But I mean, Coinbase setting up their offices in India tells us something. It tells us that they have hope that crypto adoption in India is going to increase exponentially and that they can capitalize on this by being one of the first crypto companies or international crypto companies to set up their offices in the second most populated country in the world. There is a bill that has been drafted in the United States to exempt stablecoins from securities regulation. So Republican Senator Pat Toomey proposed that the digital assets be identified as a payment stablecoin, a convertible virtual currency used as a medium of exchange that can be redeemed for fiat by the issuer. And he said that such offerings should be exempt from securities regulation by amending existing laws to ensure the definition of security does not include a payment stablecoin. So what they want to do is they want to exclude stablecoins from its definition as an asset. They want to make it on par with a normal currency. And this makes sense because a stablecoin is not really an asset. People hold stablecoins in order to buy other cryptocurrencies and not really to see its value shoot up, because a stablecoin is a stablecoin. It's stable. The price is pegged to a certain currency. And if the value of the dollar goes down, the value of the stablecoin goes down as well. So it only makes sense for regulators to treat it as a currency. Obviously, there should be some legislation for stablecoin in place to protect the users of stablecoins and also to protect the government as well, because this has an impact on the global financial system. The legislation proposed that stablecoin issuers, which would include national trust banks and licensed state-chartered trusts, be licensed by the Office of the Comptroller of the Currency. This makes sense because if they want to be treated as a currency, then they should be issued like a currency. The issuers would be required to back their stablecoin reserves with assets that are cash and cash equivalents or level 1 high-quality liquid assets denominated in US dollars. What's so interesting is that money is fiat, but they're not allowing stablecoins to be fiat. And this makes sense. It has to be backed by something because it's something very new and the government does not back it. Because how fiat money retains its value is because people trust the government for it to retain its value. It's not backed by anything, but the stablecoins are backed by something. So it means that if there's $100 billion of, let's say, USDT in circulation, the company that issues USDT has to have $100 billion in cash and cash equivalents or level 1 highly liquid assets denominated in US dollars in their treasury. So it has to be a 1-to-1 equivalence. And this is a promising bill because it ensures that stablecoins are homologated within the economy and actually treated as what it is, a currency and not an asset. Terra adds $230 million to push Bitcoin reserves to 1.6 billion. At the moment, they have about 35,768 Bitcoin, worth roughly $1.6 billion. And Do Kwon has said Terra wants to use Bitcoin as a reserve currency to back UST, which is Terra USD, which is Terra's stablecoin. So they want $10 billion worth of Bitcoin as a UST reserve, and they've already achieved 16% towards that goal. Kwon previously stated that establishing an all Bitcoin reserve for Terra's stablecoin will open a new monetary era of the Bitcoin standard because they believe that it is the strongest digital reserve asset. I mean, it's true because Bitcoin is seen as a store of value, so why not it's seen as a reserve currency? And this makes Bitcoin the first ever digital reserve currency. As we saw in the previous article, there has been a push to treat stablecoins like a currency. If it is, then Bitcoin will be treated like how gold was when currency used to be backed by gold by being its reserve currency. So at the moment, $1.6 billion worth of UST that is circulating in the markets is backed by the $1.6 billion worth of Bitcoin that is sitting in Terra's reserve treasury, which means that Bitcoin is already a reserve currency. It's crazy how the world's financial system just changed in the last 2 to 4 years. And I'm excited to see how this goes. And I don't even know how it's going to look in 2030. That's what makes it even more exciting. With that, we come to the end of today's video. Thank you very much for watching. If you liked the video, please leave a like, hit the subscribe button, share this video to your family and friends, and I'll see you tomorrow for the next one. Invest wisely, and cheers.